how the f did I lose so much money? I mean, it was going so well, and then it just went to complete shit. I honestly don't even know how this even happened. Do you even know how much stuff I could have bought with that kind of money? Maybe I should invest in NFTs. What's up, YouTube? It's your boy Jerome, back at it with another video, and if you can't tell, I am really sad right now. I just lost over $1,300 in a single week, so yeah. I mean, well, you know, not as upset as those of you who are suffering because of the crypto crash. Well, no, actually, I'm suffering more because at least you still own your cryptocurrency, and maybe one day it'll go back up. Me, trading options, I'm just left with nothing. I'm done. Finished. For those of you that don't know what options are, let me explain. And for the purpose of this video, we're just going to talk about buying options because selling options gets a little complicated and I just don't want to get into that right now. But if you want to see that video in the future, make sure to leave a like down below so that I know. And for the YouTube algorithm. It all, it all works out together. So, options. Options are a contract that gives the holder the right to buy or sell 100 shares of stock. So you pay some money up front to buy the contract. This is called a premium. And then you can use that contract to then trade a stock at a certain agreed upon price. What makes them so enticing is that options contracts are relatively cheap. You can find a lot of options contracts that sell for less than $1. Now, to be clear, when you buy an options contract, this is for the option to buy or sell 100 shares of that stock. So even though the quoted price might be, say, 75 cents, you're actually going to pay 75 cents times 100 or $75. But still, paying $75 for the right to trade 100 shares of Apple is way cheaper than buying 100 shares of Apple. So there are two specific types of options. One is called a call option. This gives you the right to buy a stock at a certain price. And the second one is called a put option. And that gives you the right to sell at a certain price. So let's get to my favorite time of day and probably yours, an example. So let's say that you buy a call option that gives you the right to buy 100 shares of Apple at $100. And that Apple today is trading at, well, just that, $100. I know, Apple's not trading at $100, but just for the sake of example, just to make the numbers easy, stick with me, okay? Well, let's say in a month from now, Apple's now trading at $110. You can then exercise your option, and now you're allowed to buy 100 shares of Apple at $100, even though the market price currently is $110. But Jerome, who in their right mind has $10,000 lying around to buy 100 shares of Apple? Well, thank you for asking that question, audience. I was just about to tell you. The cool thing about options is you don't actually have to exercise them. Actually, I would say most retail investors don't exercise them. And it's just for that reason that you just said, because it's way too expensive. No one's got $10,000 just laying around. But instead, what you can do is you can just trade that contract itself and sell the contract for a higher premium than what you purchased it for. Okay, so I know that was a little confusing, so let's go back to that Apple example for a second. Say I pay $75 today for that call option that gives me the right to buy 100 shares at $100, and Apple's trading at $100. Just like before, in a month from now, Apple's now trading at $110. Your contract lets you buy those shares at $100. That means your contract has value. Someone somewhere that does have $10,000 laying around to buy 100 shares of Apple, your contract has value to them. Because if they want to go out and buy 100 shares just on the market, they would have to spend $11,000, meaning they could save $1,000 by instead buying your options contract. So that means the price of the contract itself, the premium that someone would have to pay today, has definitely gone up, maybe that contract's worth $150, $200, maybe $400. So you can sell the contract. You would get the difference in the money that you paid for the premium versus what you just sold it for, and whoever bought the contract probably will get to exercise that contract and get a little bit of a discount off of what the current market price that Apple is trading for is. And on the flip side of that, what happens if Apple stock actually goes down to $90 in a month? Well, let's think about it. Would you pay to buy someone's contract that gives you the right to buy Apple at $100 if currently they're trading on the market for $90? No. So that contract is worthless, which means it expires and all you lose is that original $75 that you paid for the contract itself. Still sounds pretty good, right? Well, this is exactly the trap that I fell into and lost $1,300 because it's not that simple. Honestly, it's kind of like gambling. Here's a photo of my Robinhood portfolio. You can see it's very volatile because options are much, much more volatile than the actual stock market. But all that aside, you can see on December 27th, I had $1,670 in my account. And I had made $670 of those dollars just in the past month. So a 67% return in 1 month. That's pretty good. Actually, you know what? I'll toot my own horn. That's really good. I'm an absolute king. But here's where things go south. The gains started to cloud my judgment. What happens if the entire stock market comes crashing down all at once and all of your options expire on the same day? They all become worthless. So slowly over the next week, I saw my almost $1,700 go down and down and down and down until I was left with just about $400. And of course, I still thought I could rebound because my expiration dates were another 6 weeks away, but it never did rebound. And if you look at my account today, I have just around $150. Because remember, when you're trading options, you don't ever actually own the underlying stock. So it's never going to rebound. It just expires and poof, your money's gone. The moral of this story is I think you're better off just going to Vegas and playing blackjack. If you enjoyed this video, please make sure to hit that thumbs up button down below, subscribe to the channel, and share this video with your friends. And if you have any trading horror stories, make sure to put them in the comments below. I'd love to read them, whether they're options related or just trading regular stocks. Maybe it'll even cheer me up a little bit because right now I'm still very, very sad. As always, I'm Jerome with All Things Tech and Finance, and I'll catch you guys next time. Peace.